Will GDP in Q3 be black or red? Hey, it's Eric here from Homebridge Financial Home Mortgage with my weekly update on mortgage rates, the economy, and what's going on out there for the week ending October 21st, 2022. Well, my brother once said that at his funeral, he wants to be lowered into the ground by the Seattle Mariners. That way, they can let him down one last time. I don't know if he changed his mind after last week's gripping 18-inning struggle. But instead of the Mariners, he should focus his consternation on the economy. The advance estimates for Q3 GDP will be released next Thursday, and the consensus is that real GDP increased 2.4% by the quarter, compared to a negative 0.6% decline in the second quarter and about the same in the first quarter. That number is being buoyed by smaller than expected decline in existing home sales. Let me repeat that. Home sales were stronger than expected. Are home sales propping up the economy? Well, the GDP is a lagging indicator, meaning it's backward looking. And we did see decent sales activity into the summer months as inventory levels climbed and buyers took advantage of some of that softening market. Inventory levels are tapering off now. That's normal. That's a seasonal thing, and but another good part of that is that many sellers have become a little bit more reasonable at the bargaining table. Matt Gardner, he's a chief economist for Windermere Real Estate, is forecasting that the recession will start in December, January, but he thinks it's going to be short-lived and relatively mild. He thinks King County employment will drop, but won't be negative, and he expects employment growth to slow through the end of 2023 when we expect inflation to flatten out. I think it'll happen a little bit sooner than that. Remember, though, for a recession to be official, it takes two consecutive down quarters that affect all elements of the economy: housing, jobs, manufacturing, all the different sectors. I don't know. To me, the R word means opportunity. I think it's time to get prepared to take advantage of some winter bargains. For the week, mortgage rates were all over the board. They ended slightly higher, although even this afternoon we're seeing a little bit of improvement as of Friday afternoon. Here's the national averages. Conventional 30-year fixed rate, 7.32%. That is a 52-week high. 15-year fixed rate, 6.66. 30-year FHA and VA, 6.95. And 30-year fixed rate jumbos, 6.25. So when will housing costs peak? Shelter costs, that's the payments that are calculated based on mortgage payments and also rent, account for a third of the CPI, of the Consumer Price Index, but it's a lagging indicator, so it doesn't reflect what's happening today. Costs were increasing over the summer as rates increased, but they also started to already decline. You can see home prices starting to fall. They started in about late September. Rents, especially, started to drop fairly significantly. But those statistics will not show up until we get the October CPI numbers. Those will be coming out on November 10th. So mark your calendars. That'll be an interesting day. We also expect the money supply to reach a more neutral level in the coming months. This is really important because it was an overabundance of money, i.e., stimulus, that fueled the inflation we're experiencing. It's really quite simple. Too much money chasing too few goods causes prices to rise. It causes inflation. And why is this important? Because rates follow inflation. As inflation peaks in the coming months, mortgage rates will start to fall. There you have it. Some important economic morsels for you to feast on over the weekend. I just hope it doesn't give you indigestion. In the meantime, I'm available. If I could answer any of your financial mortgage related story problems, just reach out. You can call me 206 915 3742. That's 206 915 Eric. Or you can email me, Eric at ericismybanker.com, and look for me on social media. Just search for Eric is my banker, and you'll find my big shiny head. That's all I've got for this week. Have a great weekend. Talk to you next week.